Hello people, I'm Jim. In today's video, I'm going to break down why house prices have gotten so expensive in 2021. I believe there are three main areas to speak about when it comes to why houses are so expensive at the moment. These are finance, the pandemic, and government intervention. If you're anything like me and trying to purchase your first investment property or your first property in general, then the figures from the Office for National Statistics, which state that the average UK house price has increased 10.2% over the year to March 2021, will probably not be welcome news. But the most important question is, why is this happening? So let's jump right into it. First up is everything to do with finance, and the three main areas I'm going to speak about here are the below return on inflation you get from your bank, the fact across the board interest rates are super low for mortgages at the moment, and finally the fact 80% buy-to-let mortgages are back on the table. So first up, we have the fact if you have any money in the bank, the interest rate is that low that inflation is actually chipping away at the value of that money. So I have my emergency fund, which is just 6 months of my cost to live, my mortgage, food, car and all stuff like that, sat in the highest interest saving account which I could find with Atom, and they have given me a whopping, I think I need a drum roll for this, 0.5% of interest. In this instance, I'm happy to have this money here as my emergency fund, which I want to make sure I can have quick access to in case anything goes wrong. But any other cash, I would be investing at the moment.
Yeah, well, I'm investing. I'm like Warren Buffett.
So what does this mean for house prices? Well, in situations like this, people want to put their cash into something which is going to grow over time and maybe offer them an income. This could be stocks, but over the long term, one of the best hedges against inflation has been to invest into property. So this explains why people have been desperate to purchase property with their cash. Although low interest rates mean the money in your bank doesn't earn you any extra interest, it also means the cost of lending money is a lot cheaper, which is the second reason why houses are so expensive in 2021. Currently, if you get yourself locked into a 5-year fixed mortgage, then the interest rate you will pay will be around 1.2%, which is really cheap. For context, I purchased my personal property where I live with my girlfriend in August 2019. And we got onto a 5-year fixed for 2.34%, and this was really cheap at the time, showing you just how much the prices have dropped since then. The impact of this is that people are more willing to take out loans when they're at this interest rate. This is something that wealthy people do really well, and are not afraid to take on good debt. If you want to know the difference between good debt and bad debt, then please check out the video I made on it. But overall, the upshot is people are more willing to take on debt at these low interest rates. So there's more competition in the market, and people are also willing to stretch themselves that little bit further. Finally, the introduction of 80% buy-to-let mortgages again is something which can open up the market to more potential investors. Traditionally, you have always needed a 25% deposit with a 75% mortgage in order to purchase an investment property. But more recently, more and more lenders are offering their buy-to-let products at a higher loan-to-value, which increases the amount of competition and will boost up prices. The next area I want to talk about, and it feels like we've all been talking about it for the last 12 months, is the pandemic. There's no doubt that this event is going to have continuing impacts on the world for many generations to come. First impact from the pandemic is the fact that people have saved up a lot more money over the last 12 months.
Just pile up my money.
The Office for National Statistics details that saving ratios peaked at 28% in April, May and June of 2020. For clarity, all the savings ratio is the amount of money saved by a household as a proportion of disposable income. Although online retailers like Amazon have done really well over the past 12 months, people have still managed to squirrel away a lot of money. Not only this, but lots of people have been adding value to their homes during the past 12 months by redecorating. There have been certain points during lockdowns when it's been virtually impossible to get supplies. The outcome of people having more money saved is when they do come to purchase a new property, they will ultimately have more money to spend on it. And this is linked to the next 2 points around the pandemic. It is obvious to say there's been some pent-up demand over the past 12 months. People have been stuck at home and there's been a once-in-a-generational rethink about where we all live. People want home offices, bigger gardens and open spaces within walking distance from their house. Not only this, but before the pandemic, I know, it seems strange to think about a time before the pandemic, but we had a little thing called Brexit. There was so much uncertainty around this that some people, particularly investors, were holding off. But now that has moved along, there might be some residual pent-up demand from this as well. Economic markets thrive when there is certainty, and before the uncertainty of the pandemic, we had the uncertainty of Brexit.
Yay, capitalism!
To a certain degree, we have more clarity on what Brexit will look like now. Next up, we have the fact that lockdown restrictions are being lifted, and people are going back into the economy to spend money. And touch wood, by the 21st of June, all of the restrictions will be lifted. When you factor in all of these three things into the fact people have saved more money, we've been stuck inside for 12 months and have pent up demand, and now we can start going out into the economy and spending money, it seems to me that the property market will not slow down as people go out more. We are also heading into the summer, which is traditionally the most active time within the property market. The net effect of all of this is the fact there is more people wanting to buy with more money. Therefore, there's more competition, so that drives prices up. Coupled with the fact we have the underlying current that the UK is on an island, so we have limited space. So we can start to see how all of this is coming together in terms of the property market booming. Now, it would massively help me out if you guys could subscribe to the channel so we can continue to grow this channel and get more people involved in talking around property investing. The final area I want to talk about is government intervention. Now, pretty much all of these three areas are linked, as most of the intervention governments have taken around the world has been directly due to the impact of the pandemic. So in particular, what has the UK government done to impact the property market? Well, I believe there are three main areas: the stamp duty holiday, 95% mortgages, and the last point is more of a global point, but it centres around the fact so many countries have printed so much money in the last 12 months. Perhaps the most obvious reason why house prices have gone up is the fact people do not have to pay stamp duty. It was announced in March that the holiday would be extended until June. It would not surprise me if we see a small dip in the sales numbers in the few months after June, as most people will be pushing to complete before the deadline is finished. Ultimately, it means that people will have a few extra grand in order to purchase their properties. From an investor's point of view, like we stated earlier, their money is doing nothing in the bank, and the fact they do not have to pay stamp duty at this moment will act like a discount code for an investment property. From my personal experience, I've been viewing lots of properties over the last few months, and anything below £100,000, which is prime investor territory, is really competitive, and things are regularly going over the asking price. Next up, we have the introduction of 95% mortgages in the March 2021 budget. During the pandemic, most lenders pulled the plug on 95% mortgages as they were seen as high risk. In 1 year alone, the amount of 95% mortgages fell from 391 to just 3. Obviously, this prices out a lot of first-time buyers out of the market, as generally they struggle to save for a deposit in order to put down. The way the scheme works in practice is the government will guarantee the remaining portion of the mortgage over 80%. In this case, the remaining 15% if the buyer puts down 5%. So the government will compensate the lender if the homeowner defaults on their mortgage. So how does this impact property prices? Well, again, this means a whole group of people who previously could not afford to purchase a house have now come into the market. Again, making it really competitive, therefore driving prices up. The final piece of the pie is the fact so much money has been printed around the world in the past 12 months. In November 2020, the Bank of England announced it would print £150 billion, whereas in the States, President Biden announced last month he was given the nod to a $1.9 trillion COVID relief package, with possibly more to come. In fact, in the US, in 2020, $3.38 trillion were added to the economy, which is 1/5 of all the money in the economy added just last year, which is absolutely crazy when you think about it. Governments all around the world have been offering furlough or stimulus checks in order to make sure things were ticking over while everywhere was shut down. But now we are seeing places open back up. I do not think it'll slow down for a while yet, but it will come to an end at some point. So what does this mean for house prices? Well, ultimately it means there's a lot more money swimming around in the economy. And at the moment, governments and banks want people to spend this money so the economy can start growing again. And the housing market is no different. I hope you guys have enjoyed this video about why houses are so expensive in 2021. We covered what's happened with finance, the pandemic and government intervention in this video. Do not forget to subscribe to the channel, and if you like this video, please check out my video on the 5 hottest areas for buy-to-lets in the UK in 2021. And I'll see you guys in the next video. Cheers.